Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Iacchino. Iacchino, how is everyone doing? Good afternoon, Patrick. Good evening, Anissa. Hello, George. Hey, hey, Waka Waka. Let's see the Sunday drop. Wondering if it's a gap down. Why? Why so bearish, Waka Waka? Oh boy! By the way, I did put up a sector overview video, which also does the overview of where we sit with the futures indices. So keep in mind, we'll get to that in a second, but cycles are getting to the bottom, and it is Fed week on Wednesday. Let's just get right to it. Drop it like it's hot. Like, is that the market or does live stream? Drop it like it's hot. Oh boy, if you are new here, don't drop it, but consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, you know what to do. Drop down due to 1.2 billion sell side. Is that going to happen on Sunday night? No. So, we shall see. We shall see. Remember, we did trigger a double bottom going into the close. Happy Sunday, options 22. I almost said happy Monday. I'm already starting the week now. Glad everybody could join me. I see some other people in the background. Again, if you're watching this on replay, fantastic. Thank you for tuning in for the replay again. Sunday, still in nice weather. Don't expect everybody to be here. It's actually a nice day in Chicago. Let's see. Tomorrow, you got the housing market index. I mean, we already know housing's rolling over, so doubt that's going to do much. Tuesday, you got building permits. This is housing week, by the way, in case you couldn't guess. And then you have the Tuesday Red Book, but I don't think that's going to be a shocker. We should see building permits pulling back even more. Wednesday's the key day. Besides your home sales in the morning and your mortgage information, and if you're a crude trader, EIA Wednesday. The big thing is 1 p.m. Central. We have the FOMC hike projections, and the big thing is not necessarily a hike. I think they're going to go 75 basis points. The real important stuff is to pay attention to the press conference 30 minutes after the rate hike decision. I don't see him doing 100 basis points. I see him doing 75. Don't think they can do the 50. They'd be way too dovish. Not with this last inflation print. But the key thing's going to be in the press conference. So that's what's important. Adobe at or near pandemic low from March 2020. Can you provide analysis? Think of buying some calls. Thanks in advance. Okay, I'll take a look at Adobe. Let's just get through some other stuff. So remember, press conference is going to be the critical price action, at least from my perspective. Thursday, continuing jobless claims, initial jobless claims an hour before the market opened. Then we get the Consumer Board leading index to see if that's still printing negative in contraction. That's it about Thursday. It's a lighter week except really for Fed Day. Now, Fed Day can rule the whole week because that's going to be going into Wednesday. Key positioning. Remember also the Fed can't speak till after the rate hike decision. And then we got Powell speaking again on Friday, and you got the S&P Global Composite PMI, Manufacturing PMI, and Services PMI on Friday. Remember, we had the massive OPEX, very choppy day, triggered those little mini doubles going into the close. Very mixed day. Healthcare, I did talk about that on the weekly sector overview. Also talked about a stock that I'm looking for long-term accumulation mode, and it is related to semiconductors. So if you have not watched the sector overview, please do tune in. I want to know what your thoughts are. Oil down. Oil down. Energy still in long-term buy, but I'm not going to ruin that video. FOMC still 82% on the 75 basis points, 18% on the 100. Again, it would shock the market if we did not do 75. We're going to take a look at that tomorrow because it still has to get reset. It still has to get reset with, again, we had quarterly OPEX. So we'll have to see where we sit. And there will be new options positions established for the final quarter, especially from the major dealers, for portfolio hedging and the products they have to put in place. So that's just going to get, we're going to see how that with Gamma plays out this week. We are into fear mode, but remember, we don't get a bigger bounce generally till extreme fear. And current market valuation, fairly valued. Take that for what it's worth. I just really watched the yield curve, the Buffett indicator, the PE ratio, all overvalued, and mean reversion fairly valued by a hair, but this is going to go the other way to undervalued at 1 standard deviation before we're done. So, earnings, AutoZone tomorrow morning. That's about it. You got General Mills on Wednesday. You got Costco on Thursday. I think this is a mistake with FedEx listed for this Thursday. That's it. I mean, I'm paying attention to Costco. The home builders, you got home builders, and I want General Mills from inflation perspective. All right, let's see where we stand. Options 22, asking for a lot of stuff today. Apple level for a play on puts. What are you going to spend your short put profits on? Who's buying calls? Who's buying? I didn't see anybody buying calls. You got balls buying calls this week? Well, there is a aggressive buy signal, not triggered yet, and also the short-term double. You know, again, there's going to be short-term trades. Let's see. So, first off, on all our indices, I'm just going to cover this. We got daily cycles approaching a bottom. I'm not going to go through this all individually, and weekly cycles at a bottom. What does that mean? It means sometime this week, I'm looking for a more substantial bottoming pattern. That's it. We have the cycles in alignment at the bottom. Can we not get a good bottoming pattern this week? Yes. Can it wait till next week? Yes. We got the Fed meeting, so I'm expecting, especially with that, we could get some bottoming pattern. Does that mean we're going to rip your face off rally? No. Especially with where we are. Now, we could easily return to the daily rotation zone, even easily return to a 50% from this last little sell-off, which would take us just above 4,000, potentially. On the shorter term, what I was talking about was this little mini 1-hour double, which is triggered. 39.11, 39.20, 39.30. You have a clear path move it closed into. The first two targets are still in the clear path move. The breakdown zone is right in front of the final target. So that's what I will be utilizing. The key levels, and again, this is short term. The key level, what would invalidate this is a trade below 38.6275 or a close below, at least on the 1-hour time frame, 38.6750. Tonight, and this is a very wide range. Theoretically, you could have a pullback even tonight between 38.91 and 38.75, which would be a buy zone, especially with 1-hour cycles at the top. But those are the key levels I am going to utilize for tonight's data. All right. NASDAQ, again, I don't have to keep going through this. Daily and weekly cycles close to a bottoming formation. Oh, by the way, S&P, if this does trade through tomorrow, and I'd be watching this going into the U.S. Open, trading through Friday's high and then sustaining above there with a daily close above Friday's high is an aggressive buy signal for a potential return to the daily rotation zone. Again, aggressive. It could just be a short-term bounce into Wednesday. One of the key things that I will be watching for, and this is not just for tonight/tomorrow, is 39.50. If the double triggers and we get through that target, my next key target is 39.50, which is the emotional candle close on the 13th. And the rotation zone should decline into that. So the aggressive play is on a break intraday above Friday's high, or a break, a retest, and then that retest holds above Friday's high. That then translates into the full daily close, which is not until 4 p.m. Central on Monday. As long as it closes above there, it translates into a short-term bounce pattern. That's all we have. NASDAQ, double also triggered into the clear path move. The breakdown zone is right virtually at the second target. Second target is 12,017.50. The breakdown zone is 12,012.75. The first target is 11,983.75. The final target is 12,501. The pullback zone is anywhere between the 11,916 to 11,860. What invalidates the pattern? Invalidated on a 1 hour close below 11,830.25 or a trade below 11,813. So on any pullback, I'm watching for a pullback into this pullback area. On a continued rally, those are the targets. Now, daily, same thing. Trade above Friday's high is a potential roll into a bounce trade if it closes tomorrow 4 p.m. Central above Friday's high only. If it were to break above Friday's high and not close above Friday's high, the buy signal's not triggered and the trade has to be exited. So it would be a short intraday play that, as long as you get the close, could be rolled into an overnight/short-term bounce play. If you don't get the close above there, the trade is not triggered. The more conservative trade is just wait for the close. But given a Fed day on Wednesday, that gets very interesting, because if you'd be only playing a bounce through potentially midday Wednesday. That's where we sit. Let me just take off a couple minor things here. Oh, just jumping back to the S&P, because I know a couple people are still in tank mode. The key support, if it does just break down and get through Friday's lows, minor would be 38.47. I have a 38.38 and 38.28 for the S&P. For the NASDAQ, I'd be back to about 11,736 and 11,694. Dow, I'm not going to repeat myself. Same buy pattern. Here's your short term based off the 1 hour. 31,050, 31,118, 31,188. I still am always going to give the stop levels. Close below 37.40 or trade below 37.05. The pullback zone is between 30,912 to 30,795. The into the clear path move, the breakdown zone is 31,097, right in front of the second target. The bigger, if it blows through Friday's lows, the next target area is 30,522. The Russell did not have a double bottom. So, and this was actually finally weakening. Finally weakening. My support zone is 1791.60 and then about 1775. My key resistance is 1830. And then above 1830, the next level I am utilizing is 1845. Hello, William S. Options 22 did a deep dive on Adobe's Figma acquisition. May have overpaid, but they are best according to experts in the field. They were putting some of their cash to where I think they drastically overpaid, but you know what? It's their money. DAX hit the 87.5. So on a continued break below Friday's lows, I'm watching for a 12,598. This is a great air. This is the exact way you use reverse harmonics. I have to see which the exact low is, but it's going to give us virtually the same thing. Why reverse? Because if it does break down below, we already hit the probabilities on that return to the 87.5. If we break below this bottom at roughly 12,593, 12,471, and then a pretty significant area, 12,346 to 12,348. To the upside, I don't have anything. I need still some good price action overnight. The only thing I will be watching for a short-term bullish move is back above about 12,840. Notes. Finally, we're retesting. We got into that area which we called for probability-wise between 87.5 and 100. It would be a super aggressive buy above Thursday's high, not Friday's high. This is not a long-term bottoming pattern. You got cycles turning down, but given the Fed meeting on Wednesday, not touching anything with interest rates going into the Fed meeting. Personally, would rather, if this does rally, would rather wait for a pullback and a more substantial probability signal before trying to front run a Fed decision. Dollar index, I'm paying very close attention to this week. We still do have a potential double top in play. The trigger is a daily close below 109.15. That can be front run on a shorter term break below there as long as the daily does close below those levels. Those pullback levels are 108.77, 108.57, 108.38. If there's another rotation up, back, around this 109.80, 109.87 area, that is invalidated. So we had the channeling pullback, the retest the high areas, and then the pullback to retest a breakout of the channel. But if we get back in the channel and trigger that double, going to be focusing on the bigger pullback on that. To the upside, the next return, we technically closed above the 62.5, so still watching for a retest of 110.39. We'll take a look at the VIX tomorrow morning. Crude, aggressive buy above Friday's high. Other than that, not much, because we're back turning down. I'm still watching for a retest personally of the lows back from the 7th and 8th of September before looking for any patterns, especially with the cycles turning down. So it's more sit on my hands mode for crude. What else do we want to look at? Let's glance at Bitcoin real quick. Bitcoin probability-wise should still retest 19,061 to 18,527. Other than that, any rallies for me are to be sold on Bitcoin. Tesla, double top still is technically in play. We'll assess that tomorrow with the gap, but your minor resistance is coming in about 309. Your major resistance 1160 to about 314. Other than that, still watching for that to trigger. We'll recap that tomorrow morning. We want Adobe. Adobe has a aggressive buy above Friday's high as long as it rolls through a close on that. You have a gap fill. All right. So if you're looking to play this intraday, This could be an interesting short-term bottoming pattern. Your key thing if you're trying to play it intraday, first on the break of Friday's high, your next key target is 302.76. At least a 15-minute close above 302.76, then you target 309.13. All right, and that would be for the gap fill play. Your other key levels on this, beyond those I just listed, now you get that close above Friday's high. So let's say it breaks above there and stays above that in the close, then it could be played for a potentially bigger gap fill play. The next levels that I would utilize, 318.20, then back to about 328.50 area. And I'd really pay attention to that declining 4-hour rotation zone. You do have daily cycles getting to the bottom. So this could be, again, with the market, a pop play and weekly cycles at the bottom, nearly oversold on the weekly, definitely oversold on the daily, and you do have a potential divergent setup. So there are lots of potential buy patterns, and that would be for a short-term bounce. That would not be for like a play back to 400. You do, above Thursday's high, have another gap. So if this was going to be rolled into a larger term play, my next levels, 344 area, which is the 50% retracement, which is going to be substantial, especially since you have a key low back on the 17th of June and you have a key gap open right around 349.24. Now remember, any return, if you're trying to play this for a slightly longer term play between the 50 and the 62.5 with the declining rotation zone and this key significant level right around 349 is an area to watch for the next rollover before the next full gap play. So do not ignore those levels. Those are all your upside levels. The next downside below Friday's low would be 288.20 area, and then we don't have much till 255 without doing some shorter term projections, but let's see how tomorrow plays out. So there's your Adobe analysis. Again, any super chats or Patreon or buy me a coffee donations are appreciated. Apple levels. Apple levels on puts. Well, you've got the pullback. We're into where we can watch for a bottoming formation between the 50 and the 62.5. The key level is 146.59 on a daily closing basis. As long as you don't get a daily close below there, I'd be watching for the next pop before the rollover play. Why? Because now this is not guaranteed until we at least get some more probabilities in our favor. Just looking, all right there. Just double, yeah, it's pretty close. Could be slightly higher. It's actually a zone. Just see some stuff. Yeah. All right. So, cycle's not yet on the bottom on the daily. At the bottom on the weekly, but not yet turning up. So the only thing above Friday's high is an aggressive buy, and I'd be watching for a return to 150, 384 to about 155, 155.20 area. That, again, on a break below the low of Friday, my target would be 146.59. I want to see where the harmonics put us to from the last major high to this pausing bar. Reinforced right there. So on a break below Friday's low, this is my key target area. 146. 81 to 146.59. In order for me to target anything lower based off of where the cycles are, I need a daily close below that 146.59. We get the close below that level. My target is then 134.77. Until I get the close below that area, we could be pulling back and I'd be watching for the shorter term bottom in this area. Because we've already had a pretty decent pullback with cycles going into the bottom and a potential buy signal. And a potential buy does not mean a buy until it's triggered and confirmed. So I hope that makes sense. All right, so if you were looking for a bigger bearish play, unless we really start tanking Monday, I don't have one because it's in a high probability reversal area, at least for a bounce. Now, after a bounce play and the next rollover, I'd be watching for the more substantial downturn if we stay above that 62.5. The S&P is already closed below the 62.5 on the future side. Okay, and when we're talking about the 62.5, I thought it already closed below there, I thought before. I know the NASDAQ did. Yes, the S&P did close below the 62.5. So does that mean you can't see a move up before you hit the 87.5? No, you can definitely see a move up. All right, but we should be longer term reconnecting with the June lows. That does not have to happen tomorrow or Tuesday or Wednesday. Could it? Yes. Does it have to? No. What would invalidate that? Well, the first thing you'd be watching for is the minor close above 40.54. What would really invalidate it is a close above 41.49.50 on a daily basis. So don't mistake. See, that's one thing. Get your time frames in order. So probabilities favor to return to the June lows. It doesn't have to happen tomorrow. Could it? If we start breaking below Friday's lows, we could easily go into Wednesday. So that's where I'd be watching for the next short-term breakdown play going into the Fed meeting. And then I'd be hands off with the cycles at the bottom, trailing a stop to the short side. Because the little 1 hour double bottom would be stopped out. The daily bounce would not have triggered, and we would have broken a significant bottoming pattern. This is, even from a candle perspective, pretty significant. So we take that out, then I would be focusing on the short side going into midday Wednesday and the Fed meeting, because we don't have a lot of other substantial market moving information or earnings before the Fed meeting. So that's the analysis. All right, not seeing any other questions, so not going to take up more time on everybody's Sunday afternoon. Just a brief recap tonight. My focus is going to be on these mini doubles. If they get invalidated and the thing rolls over, then I'm watching for a break of Friday's lows, and then we'll be focusing on the short side through Wednesday. If we continue to trade up, then it's the doubles from the 1 hour perspective, the break above Friday's high, and then the potential to roll into a very short-term daily bounce before the next substantial rollover play, if you wanted the brief recap. And why is it so right now? Because we got a lot. You got a news week based off of the Fed. So this is where the market's going to be keying off of that for the short term, which can which can override cycles. It can override natural rhythms of the market, especially in a tactical trading market. That's why we have to really especially gauge what's going to happen tonight going into tomorrow morning for at least the beginning of this week for shorter term plays. Happy Sunday, Daniel. Thank you for tuning in. Thank you, George. See you tomorrow. Thank you, AP's World. I appreciate everybody who's spending some time on an afternoon on a Sunday, and let's reconvene tomorrow morning and help fine-tune our plays for the beginning of this week. And I say the beginning Monday, Tuesday through midday Wednesday. Talk to everyone 8 a.m. Central Time tomorrow. Have a wonderful evening. Bye for now.